This chapter is going to be good. I think we're going to simplify a lot for you guys. Most people have heard the terms support and resistance before. I like to term them all key levels, key price levels. The first thing I want you to know, there is never going to be one exact price that is support or resistance. As we talked about in the crash course, we're dealing with orders from all over the world. How do you think it could just be one price? It's not. It's impossible. So what we're looking at are key price levels, small, medium, and large price ranges that price has shown to not be able to move through. That's how we're going to identify support and resistance. These, as I'm throwing my pen here, give me a second. These are the key levels that you need to be aware of. We have yesterday's high, yesterday's low, Asia high, and Asia low. This is the pin high or the body high, depending on however you do your analysis, from yesterday's high and yesterday's low. This is the pin high from the Asian session and the pin low from the Asian session. Then we have low of week, which is symbolized as LOW. High of week is HOW. Low of day and high of day are symbolized with LOD and HOD. Those, again, are going to be drawn from candle bodies, not wicks, when we do an ASFX analysis. But if you're looking at the actual high, of course, that's going to be represented with a pin. But when we go in to do our analysis, drawing that from bodies makes way more sense than it does from pins. The thing about that, as we move into this next slide, is you have to just be consistent. So bodies with ASFX are what we use for everything except measuring the Asian session. That has to be from pin high to pin low. And the only other time we're going to use bodies, we're using bodies for everything except measuring that Asian session and also finding the support zones with this 2-candle rule that I'm going to show you. The 2-candle rule is drawn with pins. That's how we identify the key zones. So here we've got price action moving lower. Specifically, we're zooming in on these pins right here. We call it the 2-candle rule. The 2-candle rule states that we want to find a pin where the 2 candles to the left and the 2 candles to the right are not either lower or higher. If we're drawing the zone on the bottom, we want to make sure that they are not lower. So this pin right here, as you can see, has 2 candles to the left and 2 candles to the right. The 2 candles to the left are not lower than this pin, but the 2 candles to the right do come lower. So that can't be the pin that we use to draw our zone. Instead, we're going to use this pin right here to draw the zone, because here, the 2 candles to the left do not come lower than the bottom of the pin, and the 2 candles to the right do not come lower than the bottom of the pin. And then what we do is we draw a horizontal box from the pin, from the top to the bottom of that pin, and that shows us the significant price zone. And notice how price slows down here inside that pin. So it makes sense. I'm going to walk you through a couple of examples here. So first, we're looking at another chart on the 15-minute. This is Euro NZD. As price moves lower here and sets the low of day, we could draw a horizontal line right on the body. Like I said already, that's where we use bodies, not wicks. But for the 2-candle rule, we're going to check the 2 candles to the right and the 2 candles to the left and see if they're lower than this pin here. And they're not. So then we're going to use that pin to draw our horizontal zone. Now, as we look to take trades towards that zone, if we can't get good risk reward, 2-to-1 to that zone, we're not going to anticipate that our trade would just break through this significant zone. So again, risk reward plays a factor in the entire picture, but the risk reward doesn't even matter if there's a zone in your way because it's blocking you from getting good risk reward. And what ends up happening with this? Look at what happens overnight. It never breaks that zone. So if you were trying to go short, anticipating this to come lower, it's not doing that because it showed resistance to this zone, showed support to the zone. The name you use, support or resistance, is semantics. It's a key zone identified by that 2-candle rule. Let me show you another one. Price moved up here. This is Euro AUD on the 15-minute chart. We have a pin up here. The 2 candles to the left and the 2 candles to the right are not higher. This pin is the highest, so we're drawing our zone right there. You can see it here. Watch what happens. When price finally makes it up to that zone, it doesn't just break through and run. So if you were looking to buy it down here, you would want to make sure you can get good risk reward to that zone. If not, you're going to get stuck in sideways movement like this because at these key zones, price does not just shoot through. So what it means for a lot of us is we want to wait to see those zones broken and then retested for our entry. So here the zone was set at the Asia low on the 4th. As we move, this is the Asian session. This is another example on Euro NZD. As we move through the Asian session into the London session, the zone is then broken here during the London session at about 3 a.m. Now that the zone has been broken As we come back to that zone and it tests the same zone that was set in the Asian session, we can potentially look for trend to continue because look, the 50 EMA is above the 21 and the 8. You can see the 200 EMA up there. So it's in a downtrend. So we broke support. Support then becomes resistance and we look for it to make a move lower. Look what happens as the day goes on. It sits sideways. Again, we always know it's going to have an issue with that zone, but it's still bearish and it does make that move lower as time goes on. So it's using the zones to identify key levels and use that 2-candle rule. If you're drawing the zone on the bottom, as we did here, your 2 candles to the left should not be lower. Your 2 candles to the right should not be lower than the pin. Then the zone is the entire pin. And that's where you will see price slow down. At the Asia high, at the Asia low, at today's high, today's low, yesterday's high, yesterday's low, high of week, low of week. Those are the 8 that I put in the beginning of the chapter here that you gotta write down and you cannot forget them right here. Make sure you screenshot this, make sure you don't forget this. This is where you're gonna look to draw these zones and make sure you do not draw it with a zone here because this pin within 2 candles of it went lower. So you default and go to that next lower pin right here. That becomes the zone. And now you've seen a couple examples of this. You can go test this out for yourself, but you'll see it works every single time. That's where price slows down. So we want to make sure that we are reading risk reward to the next zone. And if risk reward is not great for the ASFX systems, at least 2 to 1, normally we're not taking that trade. Let it break the zone and then look to trade after that. So that's how you draw support and resistance zones using the 2-candle rule. If you have any questions, put them in the comments below. Next chapter, we're going to talk about how much capital you need to start with in order to build a successful trading business.